things have been so all over the place. But one thing is that 22,200 could hold.
Well, hope so, right, Sonia? And I think the first rates are there. 22,270 is where we are at. So it's a good start for 50 points higher. I think we've had a 50-point higher start for 3 days in a row. And then, of course, things change. But 40 now, 43 now, 100-plus points in the Sensex, 73,231 is where the Sensex is now trading at. Mid-cap index is up 173, and you've got the small-cap index, which is also starting, I think, about 1/3% higher. So these are indices and how they are starting up. The SUs was, all the rage yesterday. So we'll kind of course, look at that. Metals yesterday, and of course, lots of result reactions, some of which we highlighted as we started. So these are the indices, but it's all about stocks. Sonia has got those. Sonia.
It's all about stocks this morning, right? So we're going to begin with Bharti Airtel because there you have, good numbers. Q4 saw a very strong subscriber addition. A lot of brokerages, by the way, have raised their target price and earnings estimates on Bharti. So I have Jefferies with me. They raised their target price to 1,590 from 1,300. So Bharti is now gaining some ground, up almost 1.5%. But the other really strong set of numbers is Siemens. Just look at the move here. It's raging this morning, almost 9% higher. Not only have the margins expanded for Siemens, but the board has approved a demerger of the energy business into a separately listed company. So there's more shareholder value being attributed by the company. Great decision. At least that's what the street believes. And the stock is up almost about 8%. Remember, Siemens is also up 50% in the last 3 months. So despite the rally, we've seen build on to its gains. Shree Cement is the other one. Strong earnings coming through. The stock is up about 1%. But I want to look at what's happening with Colgate, because after a while, we've seen a decent set of numbers. The rural markets seem to be coming back, but the stock is under a bit of pressure, now down about 1%. Margins were at an all-time high. Disappointing set of numbers for Apollo Tyres. Barely any growth in the revenues and barely any movement in the stock this time around. Cipla, there is an impending large block deal where promoters are looking to sell 2.5% stake via the block deal. So the stock is tearing now on the upside, up almost about 5%. Keep that in mind. Thyrocare, strong set of earnings is what Thyrocare has reported this time. Just look at that, 4% higher, and it has been gaining ground. Oberoi Realty is the other one I'm looking at this morning. You have EBITDA growth of 7% for Oberoi Realty, up about 2% on the stock as well. Dalmia Bharat Sugar, strong earnings coming through for that one. So let's take a look there, 0.5% higher. V-Mart Retail had a good set of numbers. And then you have some of these stocks. Okay, look at V-Mart Retail. I notice a lot of these players that are in the rural space are now picking up pace. So let's just get V-Mart Retail back up on board. There you have it, 5.5% higher on this one. Big move. Post a good set of numbers. And finally, Bosch, Indus Towers, Canara Bank are included in the MSCI index. So these are some stocks that I'm looking at this morning. But this is the main, focus area. 22,250 is what's holding. 46 points higher on the index here right in front of you. And I think this also, 2,000 stocks on the advancing side, which means that the pullback that we've seen over the last couple of days is something that's holding for now. Nigel, over to you.
Well, Sonia, just take a look at a few stocks that I'm looking at. Thyrocare came out with a set of numbers late in the session yesterday. It's seeing some follow-through buying, a rank underperformer, good growth on the top line, margins as well improved. So that one is up close to around 4%. PB Fintech, that's another stock out there. It's holding with a gain, I think, of around 3%. Also, that's doing quite well. Sami Hotels, Shami Hotels should come up for you. That one as well is up close to around 3.5% in trade. So big up move is what you're seeing on some of these names. Salsa Technologies, well, that stock as well is up close to around 4% as we speak. And volumes are rather high on that one. So keep an eye out on that stock. On the flip side, Devyani, yesterday it came off a little bit from the top. Today as well, the stock is down close to around 2% or thereabouts. Sagar Cement, the numbers look quite disappointing. The only good news for them is they have valuation support. So that's why I don't think that stock is low. In fact, I think it's up close to around 1.5% or thereabouts. A fair bit of movers from the broader markets.
And absolutely, and it's a vibrant-looking screen as far as the broader markets are concerned, and there is actually a lot going on. Let me just quickly take a look at a few other movers and shakers. So I'll just look at a few volume-led gains, right? Look at Thermax. I think we pointed that out. And the results came, of course, day before yesterday. We had the management, actually before that, and we had the management day before yesterday, 9.5% on Thermax. It's the second biggest volume-led gainer. And of course, the number one gainer is Siemens, as we've been highlighting. JSW Energy is at the number 3 position with volume-led gains, 4% on JSW Energy. There is Policy Bazaar, which starts with a 5% pop. I saw an upgrade from one of the brokers yesterday. And there is, of course, another insurance company which the IPO is open today. That is Go Digit Insurance. So that's some news flow from the industry. Bharti X Hexacom 4%. Rima, of course, highlighted that earlier. Barmer Lorry is coming up with a 4% pop. You don't usually see that with the top volume traded list here, but it is. V-Mart is up 5%. We'll be speaking with the management of V-Mart on numbers and outlook going forward. So 2,300 there nearly on V-Mart. Repco Home Finance, South-based lender and 6%, 500 plus on that one. Swan Energy is up about 4%. So there is a lot happening in the broader market with lots of volumes as well. On the downside, Cochin Shipyard is pulling back a little bit, but it was a big move yesterday, a 10% move, so it's just some profit booking. DLF something similar with a 2% odd cut there. And you've got Apar Industries and Aarti Industries, which are down about 1.5 odd percentage. Bosch is down about 2% or so as well. So that's the list, but 30 points on the Nifty to show for it.
I know we've spoken about this ad nauseum, but Thermax is really the one that's surging this morning. If you pull up the Thermax stock, right, look at that, 11% higher now. And the management has indicated that they will continue to be debt-free at all levels. So apart from the fact that the business is growing very well, the balance sheet has improved substantially, debt-free. Export business is going to be growing as well. So, this is one stock that the market definitely likes.
Absolutely. And the big one, right? It's a big name, well-owned institutionally, etc. as well, but not stopping it right now. Pratik Gupta is with us, CEO and co-head Kotak Institutional Equities. Pratik, good morning. Good to have you with us here. Thank you for your time. Prashant, this side. Just first sort of provide us with some feedback, because, you're talking to clients on the institutional side, and mainly on the foreign side, if you can provide that. What are you hearing? This selling that we're seeing, what is that? What is this on account of? What's the dominating driver behind this?
Yeah, hi. Good morning, Prashant. Thanks for having me. I guess as far as the foreigners are concerned, from their perspective, a couple of factors to keep in mind. First and foremost is most global emerging market funds, they're not really getting fresh inflows. US interest rates are still holding up high. You're seeing China, the Chinese markets have started recovering in the last 1 month or so. Just for example, the Hong Kong market, Hang Seng, is up 15% in the last 1 month compared to our market, which is relatively flat. And also there's some the usual concerns about India's expensive valuations. The Nifty, for example, is trading at about 20 times 1 year forward earnings. And that's actually prompted a lot of folks to take some money off the table. And lately, I guess in the last, say, week, 10 days or so, all the various media reports about some nervousness around the election outcome, which, although in the last few days it's sort of abated a bit, but nonetheless, there is some concern that one never knows with elections how they go, so why not take some money off the table? So combination of factors, along with the fact that by and large, barring a few stocks here and there, the earnings season has been a bit of a mixed bag. We're not seeing massive earnings upgrades to justify the high valuations. So it's just a little bit of, profit booking and taking money off the table, just at the margin, investing in other markets like China or Japan, ASEAN to some extent. So it's just a mix of various factors, no one single reason.
Okay, mix of various factors, no single reason there. Pratik, hi, good morning, and always great seeing you. One pocket that is coming back in a big way, and we've been discussing this through the show, is the rural plays, right? So even this morning, you've had Colgate come out with record high margins. Most corporate earnings that have exposure to rural markets, whether it's Hero MotoCorp, Dabur, HUL, all indicating that there is a recovery in that pocket. Is this a good theme to play over the next 12 to 18 months?
Yes, we think from a slightly longer term perspective, this makes sense. And you're right, in our conversations as well, when we speak to, at Kotak, we cover some 270 odd stocks. A lot of the rural focused companies are talking about some signs of either they're already seeing a demand recovery or they're expecting a demand recovery. And hopefully we have a normal monsoon as per the weather forecast. So that should also help. So by and large, yes, we are beginning to see signs of an improvement. But I'd still say that as of now, most of it seems to be hope. We haven't really seen the full-blown recovery as yet, but the stocks are beginning to price that in. They've moved up a bit, but we think there could be scope for earnings upgrades in the next 12 to 18 months. So yes, we are positive on the rural focus themes.
All right. Hi, Pratik. Good morning and good to see you in. I wanted to ask you about some of these stocks actually that have been ranked underperformers, but very high in terms of pedigree, management. They have a good track record on a longer term. HDFC Bank, Kotak Mahindra Bank, HUL, all of them big underperformers, but it's hard to ignore them at current valuations. What's your view?
Yeah, hi. Firstly, yes, on the valuation part, that's the general feedback we get from investors. But bear in mind, it's really the foreign selling which has really been impacting some of these stocks. These were big heavyweights in foreign portfolios, all the stocks that you mentioned. And as I just mentioned a minute back, we have been seeing very heavy foreign selling in the month of May alone. In the first 12, 13 days, we've seen about 34,000 crores worth of foreign selling in the cash market. And obviously in April and earlier as well. So valuations have definitely come off, and that's something fundamentally a lot of these stocks are looking attractive. I can't comment on Kotak given I'm conflicted, but HDFC or HUL, etc. But equally, the questions that are coming up is what's the trigger? So in the short term, perhaps there's no immediate trigger, and right now there's a fancy for going down the quality curve, whether it's the banks or the FMCG companies. The quality is not doing as well. Value is in the short term doing relatively better. But if you're an investor with a 2-3 year investment time horizon, then we definitely recommend these stocks for investors with a slightly longer term horizon.
Got that. Pratik, do you reckon that flows will come back, foreign flows will come back in a big way post-elections?
That's a great question, Prashant. In our conversations with all the sovereigns and the foreign long onlys and even some hedge funds, I think a lot will depend on, obviously the election outcome, assuming there's a stable government, no negative surprise. Firstly, most of that is in the price already. No one's really expecting a major change in the political establishment or a major dramatic change in the policies of the new government. So that's point one. A lot of it is already priced in, and our valuations, like I said, at 20 times 1 year forward, we're already pricing in a lot of the good news. Having said that, in our conversations, we do come across a lot of global investors who just want this event risk to be out of the way before they come back to India. And obviously, we've seen some money being taken off the table prior to the elections. And we could see some of that coming back. I guess the more interesting question is, even if there is some money that comes back into India after June 4th, assuming the same stability of government and so on, is whether the money will come back into large caps or whether the money will come back more into the mid and large, small caps. And that's where we're seeing very mixed views from a lot of investors, depending on whom you speak to. The large global investors who want liquidity, who want large ticket sizes, for them, they can't invest just $5, $10, $15 million in a stock. They're looking for minimum $50 million to have a position in a stock. So they will obviously gravitate toward the large caps. Whereas equally this time, because I guess generally there's a feeling that the China rally is more of a bounce, a dead cat bounce, not really a structural story. India is a true, real, medium, long-term growth story. We want to participate in India. So therefore, we think a lot of the money will come in to some of the India-dedicated funds or some of the EM ex-China funds or Asia ex-China funds. In that context, India could probably get a little bit more of the flow, and we think some of the mid caps and small caps should also benefit. So it'll be quite interesting after June 4th, but we do expect some flow to come in.
Okay. By the way, folks, this market is really piling on the gains, so don't lose sight of that. It's actually a breath of fresh air to see this kind of momentum on the upside because, it's been down days for many days now. Not the Nifty, but look at the mid-cap index, right? The index is up almost 1% and big moves coming in. Finolex Industries is up almost about 8%. You have loads of stocks that are moving up. Union Bank is up about 5%. JSW Energy is up 3.5%. And then you have so many stocks hitting fresh 52-week highs as well. We were talking about some of them earlier. Thermax is really the big gainer. Nalco is at a fresh 52-week high. Oberoi Realty. Pratik, I wanted your thoughts here. You know, real estate after almost a 10-year lull has come back in a big way. And some people may call it hyping up many of these premium real estate projects, etc. But the proof is in the writing, right? I mean, you can see many of these stocks hitting fresh highs as well. What do you do here? Do you think you can put more money to work in some of these names?
Yeah, we like the residential real estate plays, not the office property plays as much. But the residential side, we think there's scope for earnings upgrades. We're seeing, more importantly, we're seeing very strong volume uptake. It's not being driven by pricing alone. And a lot of these companies in the last down cycle, they've actually deleveraged quite a lot. Governance levels have improved quite dramatically. So to that extent, we like the residential real estate plays. We think there will be continued surprises in terms of the volumes. And pricing-wise, we're also seeing most of these developers this time around in this upcycle are being relatively more disciplined. Unlike, let's say, if you go back 15 years back, when there were pretty dramatic price increases being taken, which quickly made housing quite unaffordable. Even now, obviously, prices are unaffordable for a vast majority of the population, but the demand-supply gap is there. And we've seen a lot of projects which have only recently been announced in the last 1 or 2 years. The supply is yet to catch up. So there is still a demand-supply gap, and especially in the metro cities, and increasingly, we think this will spread to the smaller tier 2, tier 3 cities and towns as well, where we think demand will be quite strong. So, and the last angle I would put is the interest rate outlook. That also looks reasonably stable. If anything, perhaps you might even get a downtick in the later part of the year. But combination of a strong residential upcycle, which typically tends to last for many, many years, not just 1 or 2 years, and we're still in the early to middle stages of the residential upcycle, coupled with deleveraged balance sheets, strong volume growth. We think it's, and government policy also, we think will be supportive going forward.
All right, Pratik, always good hearing your thoughts. Thanks a lot for joining in and filling us in with those details. Looking forward to having a chat with you in the coming weeks, maybe post the elections. Well, let's focus on a big name that came out with a set of numbers, which is Shree Cement. The numbers look rather good. The stock has come off actually a little bit post the gap up opening. To understand more about the past quarter and how's the year going to shape up going ahead, we are joined by Mr. H.M. Bangur. Hi, Mr. Bangur. Good morning. First of all, congratulations on a very, very good set. Let's focus on the top line. One part of the street cannot understand how come your realizations were down only around 2.5–3%. But there could be an element of power sales. So could you help us out with some more details? One is, how much were the power sales in the past quarter, and on a year-on-year basis, was it much higher? Also, if you could give us some clarity on incentives. Did you book anything in the last quarter?
Every year in the last quarter, there are many yearly incentives which have to be given. They are always booked in the last quarter. So, but that is for every year, it will be the same. When we compare quarter to year, that is last year, the same quarter, that should be the right comparison, because otherwise it is a seasonal product. Every quarter to quarter, there will be big changes. But when we see from the last quarter, the realizations are down by 3%, because basically the prices in the industry has come down. It is not only for us. The cost has come down. Energy costs have come down after the last year's top hike, and that is all. So there is nothing special that the prices have been dropped. In fact, our prices on an average is little bit better because of the small branding exercise which we have started in the February. The results will come in this year.
Okay. All right. Could you give us some more details, if you have to quantify the premium sales as a percentage of your mix, What was it for the past year? And you mentioned in the past that you want to see premium sales move up to the mid-teens, I think so. How much was it and where is it headed?
It has not increased at all. We have rebranded. There were two premium products. We have rebranded it to Magna. We have advertised about it. As it is a new product, the prices have also gone up a little. The quality is good. It is well respected. But till now, the volumes are the same. That is around 12 to 13% of our trade sale. And very soon, we have started this new brand only in February. So very soon it should catch up. We have to give it 6 months time before it really matures.
Okay, got it. All right, Mr. Bangur, the street basically works with two numbers for cement. One is on volume growth. I recall that you were saying that low teen growth is what you're looking at for FY24 and you have managed that. Now for FY25, what kind of a volume growth are you looking at? And your EBITDA per ton is holding above 1,350 rupees. What is the range you'll look at? Because you'll have operating leverage, pricing is weak, but input costs are down as well. So these two numbers, volume growth and EBITDA per ton guidance. Please go ahead, sir.
Right. So volume growth, first I will say, it will be again between 8 to 10%. That is what is expected. Expecting that India GDP will grow at 7% or more. So our volumes will be highly dependent on the macroeconomic situation. That is how the India grows. So if India is expected to grow at 7%, we are expected to grow at 9 to 10%. It was a little conservative. The second thing is regarding EBITDA. EBITDA in a commodity is decided by the input cost, output cost, or any of which we don't have any control. So I will not venture to give any EBITDA guideline.
Okay. Mr. Bangur, good morning. It's always a pleasure speaking to you. So you're saying that you won't be able to give an EBITDA number, but is it fair to assume that your EBITDA per ton will be around this 1,400 rupees, 1,500 rupees, or is it, will it slip well below that? Just trying to get a ballpark estimate.
Ballpark estimate also will not be there, but what I can say is our efficiency levels will increase. So our per ton, when you say about costing, I can say that commercial cost, I don't know, but per ton our energy cost, energy consumption will come down. Our energy, which is 56% at present, is renewable energy. We would like to increase it to 60%. So these parameters we are following. The cost, we just don't know.
Okay, okay, fair enough. So the cost is something that you can't, you cannot analyze at the moment, right? So this volume growth that you spoke about between 8 and 10% in FY25, is that something that is sustainable despite the kind of pressure that you're getting in terms of demand? I'm asking because, the heat, the scorching heat this time, the elections, etc., has impacted demand quite a bit. Despite all of that, you can still eke out a 8 to 10% volume growth. Is that fair to assume?
Yes, I am saying that with high confidence because demand is only deferred. Every year, the summer comes, the same seasons happen. We are little pessimistic in the beginning of May, June, that demand will come down, but suddenly it picks up. If India is growing, then the cement and infrastructure needs will be very high. So we are confident about the demand growth.
Right, Mr. Bangur, hi, good morning. Prashant here, thank you for joining us. Always good speaking with you, sir. Just give us a little bit more sense on pricing, sir. I mean, not just for you, but I mean, how the pricing dynamics are going to look like through the rest of this F525, because some have been saying that, if before rains, if there's been no real substantial move on pricing, I mean, that's the peak period for one to be able to do that. And then, of course, rain set in, etc. So we are kind of, it's kind of going to be very subdued in that sense. Would you agree with that this year?
No, that was an old theory. When all the housing were rural housing, self-made housing, that time rains were important. The new techniques were not there. Now, most of the consumption is by the reputed builders, organized sector. There the range doesn't matter. It is the working hours of the labor. In scorching heat, working hour when the cement can be consumed has come down. And immediately when the heat comes down, say in July, August, the rains are positive, not having any negative impact. That was the old theory.
Okay. So then what you're saying is, I mean, depending on how the situation shapes up, there is room for price increases through the year. Could you give us a sense what that could look like for the industry in your assessment?
My assessment, in the past, we have always seen the price increase is always a little less, 1 to 2% less than the general inflation. The rest of the money comes by more efficiency. Over 20 years, every year we see price rise is little less than the general inflation, and the margins increase because most of it comes because of better techniques, better technology, and the costing comes down by innovations, I will say.
All right, Mr. Bangur, X of the power sales, I just want to reconfirm your realizations are down by 3% sequentially?
Yes, power sales are, because the energy cost internationally, the coal cost has come down. Power business will depend only on the coal cost. We are a converter of one type of energy.
Mr. Bangur, I'm trying to get the... Right. Mr. Bangur, I'm trying to get the core cement realization change. So that is X of the power sales. We'll keep that aside. It is down around 3%?
Yes, it is down around 2%. And the volumes are up by 8%.
2%. Got it. Just one more question from my end, and we've discussed this in the past as well. You know, of late, various sections of the media are reporting that Orient Cement is on the block. Now, we are unable to confirm whether or not that's true, but when we have the management, they say that it's unlikely to be the case. But you were an investor in the company, you know, in your personal capacity. Any view on the company at current reckoning, and if you have to do some inorganic growth, would this be a potential acquisition candidate?
No. My personal investment has nothing to do with the Shree Cement growth plan. It was very cheap at some point of time. It has given me good return. I am happy about the present management. They are managing it well.
Hey, Mr. Bangur, it's it's always fun speaking to you to learn about the industry, about your company, and hope you continue to stay well. Looking forward to speak to you again very soon. Thank you for joining us on the channel.
Thank you.
Okay, that's Shree Cement with the way forward. By the way, good-looking market, good-looking screen. The mid-cap index is now up 1%, and one sector that has been doing very well is real estate. DLF's Privana West project in Gurugram, worth almost 6,000 crores, was sold out in 3 days. Our colleague Timsy caught up with Akash Ohri, who is the joint managing director and CBO of DLF Homes, began by asking him about the Privana project and outlook for sales going forward. Listen in.
Well, I think launches happen post the approvals, and therefore some of these approvals didn't come. So there was no conscious plan of shifting it out. But as you've seen, yes, the results have been pretty robust. The margins have been very good. Profit has been good. Yeah.
What about Privana? Was Privana supposed to be launched and sold in FY24? And has it been pushed to FY25 because that's what the sales look like right now? I mean, what will FY25 bookings look at this, given this case of Privana getting pushed in FY25?
Well, Privana didn't get pushed by design, and there were some regulatory issues in terms of approvals that got pushed out. But you've seen we've done well. We've sold out Privana West as well. The 25 guidelines will be about 17 to 18,000 crores that we will do that in sales. So as far as Privana is concerned, again, we've done well. It's an overwhelming response again to a DLF product, and I think we're extremely grateful for that.
Okay, and when we consider FY24 bookings, they were at around 14,778 crore rupees versus 15,058 crore rupees. So How would you explain that?
See, what happens in these things, as you know, most of the sales happen post-RERA approvals. And you plan for these launches based on these approvals. But there are times when some of these things don't happen as per plan. But that in no way should you consider or even doubt the capabilities of the sales engine or the demand today of a DLF product. But sometimes these things do happen. You have to take them in your stride. And as you see in Q1, we proved it again. There has been a robust sale to Privana West, and we've done well. So yeah, sometimes things don't go as per plan, but as far as the product is concerned, as far as the geography is concerned, it is pretty well established now and doing pretty well.
So as you said, sometimes things have to be taken in the stride the way they come. You've also spoken about Privana being sold completely. What is the booking value here? All of the Privana sales will be seen in the first quarter itself. Also, how much of the 11.6 million square feet launch is there in the FY25, which is going to come from Privana?
So Privana, the total size, the launch size has been about 5,590 crores, and all of it that you will see in Q1. As you know, it's almost about a 2.8 million plus size. All the other launches as we go along, there is Goa, there is Mumbai, there is Lux 5, some floors, a product in Tri-City. So we've got a good launch pipeline for 25.
A good launch pipeline. DLF has also said that the launch area has increased from 10 million square feet to 11.6 million square feet in FY25. But at the same time, the launch in FY24 has been reduced from 25 million square feet to 24. So are some of these launches getting spilled over for the next fiscal? That is the one where we are in currently?
So as I said earlier, there will be some changes based on demand, some changes based on approvals, and of course, once we get ready with the product launches. So there will be that little bit of a variation that you should always look at, but otherwise, most of it will be as per plan.
So most of it is as per plan, only a little bit of variation. But when we consider the Sector 61 is an added project with an opportunity sale of about 20,000 crore rupees, by when does this get on the line, and what is the capex involved in this?
Well, you saw the success of Arbor. I won't say it's the immediate geography, but it is almost there. So this product is in the golf course extension as you exit the golf course road. We are reasonably excited about the product. It will be a luxury product. I feel there will be a good traction and demand for this, not only here, but I think pan-India and of course from the NRI markets as well. So as far as this particular product is concerned, I think if all goes well, later part of the year, most probably it will be in 26.
Okay, talking about the NRIs and the interest that we are seeing, you've got great numbers from both the Privanas. What is the NRI contribution to the total sales? Last time you mentioned that it was 28%. Has there been an increase in this time?
Well, last time it was about 22, 23 odd percent. It's increased to about 27%. What is heartening to know these days is that the NRIs are backing the Indian good real estate in a good way. There was a time where most of these investments have dried up. But I think it's good to see them come back. Most of the NRIs that we are talking about are investing for the future. This is, should they return in 4 to 5 years, they make these investments. I think that's a market we will continue to develop and explore.
what percentage of buyers have opted out for housing loans? Can we understand? Because the pricing is quite, as you said, these are luxury segment houses and a lot of NRI interest. People are looking this as an investment so that once they come back, can we get some details on that?
Well, at this point in time, the booking amounts are 50 lakh rupees, which generally come in from the customer themselves. But the banks have been very active and very supportive. So I think to start with, there will be about at least 30%, if not more. But those numbers I'd be able to, give you more accurately, say in 3 months from now, because at this point in time, mostly internal accruals are where the monies are coming from. So, but the banks are there. Most of the big banks are doing good business. And I think this particular trend will continue.
Which projects are you going to launch during the year that will clock sales of 36,000 crore rupees? I mean, that's the target for the coming fiscal is what I understand. That is FY25.
No, 36,000 is the developable potential. The launch guidelines, as far as the sales guidelines, will hover around the 18,000 crore mark. So we've got, as I said to you earlier, we've got Goa, we've got Mumbai coming in, we've got super luxury in Gurgaon, we've got some floors in Gurgaon. So we've kind of spread out pretty good.
My last question, how soon is the Mumbai launch happening? Where are we on that project and by when can we see bookings happening?
Mumbai will be sometime in Q3, Q4 this year. So, we've already set the ground for it. Work both from the project side as well as the revenue side has begun. We've started to put our people in place. So, yes, Mumbai, please look forward to Mumbai in Q3, Q4 this year.
Okay, well, that is the word coming in from DLF. It sold out in 3 days of the launch. Who are these people buying such premium properties? But I mean, of course, there is a market for that as well. But let's get back to our equity markets because it's looking pretty good. For now, it's holding steady above the 22,000, almost 22,300. That's a 70-point gain. And the mid-cap index is the one that's surging up almost about 1%. The big movers in the frontliners are Cipla, Adani Enterprises, Coal India, Hindalco, Tata Steel. Metals is actually topping the charts this morning. Almost all metal stocks well in the green. Let's take a quick break. On the other side, we'll have Lalit Agarwal of V-Mart Retail to talk about their Q4 earnings. Do stay tuned in.
Okay, welcome back. I mean, the market's up 70 solid points. It's looking pretty good out there. I mean, all across, all told. I just want to quickly mention two names. One is BSE. BSE is at 2,800 bucks now. It's up 5% as things stand right now. Was nowhere in the picture in the morning. but it most certainly is come back into some really solid gains. And the other one is Sterling Wilson and Solar. That is up 5% as well, 759. So I think that is almost getting to its previous highs. More names in a bit from now, but let's of course get on with more companies which reported earnings, right? V-Mart Retail is the next one. Revenue growth came in line. It reported same-store sales growth of 6%. And of course, they opened 9 new stores, but they also closed 19 underperforming stores. Let's talk about all of this with Lalit Agarwal, founder and managing director at V-Mart. Lalit, hi, good morning. Great to have you with us here. Prashant this side, it's always good to see you. You know, last time we spoke with you, you said that at the margin, consumer sentiment seems to be improving. I think this was back in February when we spoke. So let's just sort of because FY24 is done now, let's kind of put that sentiment into numbers for FY25 if we can. So revenues for the full year 24 went up 13%. And same-store sales growth was up just 1%, 24 over 23. Could you give us numbers? What are you expecting for FY25? Lalit, I think you'll have to unmute yourself.
Good morning. I definitely feel excited and a little more rejuvenated because we are seeing some comeback of the consumption getting witnessed for the last 2 months. March has been good. April has been good. The last quarter has been good, fairly good. So things are coming back to normalcy. We are feeling very excited. We should regain the lost number, which we haven't been able to do for the last 1 year or 1.5 years. So I think we should be targeting somewhere between 6 to 7% of like-for-like growth, and also try to grow some more stores so that we have a ballpark figure of total growth of around 13 to 15%. So that's what we are trying to achieve.
6 to 7% of this is same-store sales growth.
And that's what we think. That's how our planning for the planning purposes we are projecting. And you don't know where does the camel is right now standing. We don't know which side does the camel sit down. So it's yet to come. A lot of things happening in Indian politics. A lot of things happening in the economy. So some of the stuff which is coming up are positive. So we are excited about it.
So when you say there are signs of comeback in consumption, which are the pockets where you're seeing maximum amount of traction? And how is the demand environment in places like UP, Bihar, Uttarakhand, etc.?
So we've seen a little bit of challenge in the state of Uttar Pradesh of late. But yeah, some part of it, we are seeing it coming back in the last 1.5 months. We saw some comeback coming in. We are also seeing some good growth coming in from the eastern part of India. We are seeing some good growth coming in also from Bihar. The southern India seems to be a little bit muted right now. But yeah, once again, for the lower class consumption, as we introduce some new low ASP product lines in southern India, those are giving very good responses. We are seeing a little bit of change in consumer behavior. People are definitely consuming, but they want to consume a little more cheaper product, a little more lesser priced product, and they are not consuming a higher priced product. So we are seeing a good comeback of rural. We are seeing good comeback of semi-urban kind of consumers, and we are seeing some good growth coming in even from Tier 4. Tier 3 had been struggling. We are expecting that Tier 3 also will improve now. So these are some good signs which makes the economy very stronger. So we feel this should continue, and there is definitely some challenges that we had in the states of Madhya Pradesh, Rajasthan also. But there also we have been witnessing a good growth right from 1 or 2 months. So I think this is a good move if it continues. Yeah.
So it's safe to say that the worst of the rural pain is now behind us, right, in terms of consumption?
I mean, that's what I project, and that's how I plan. And this is what the pulse of the market that when we travel, we talk to the consumers, when we understand what's going on in their life. So we are seeing some of these things coming back, and people are becoming more confident. If the election results are great, and the confidence level can really get boosted, and more confidence will bring in more and more consumption.
So what does this mean for your own store addition? What is the expected store addition in FY25? I think in 24, you opened about 46 stores. What's the plan now that rural demand is coming back?
we plan similar numbers. We plan around, once again, around 50 to 55, depending upon the good location, depending upon the number of stores that we get a good, where we can have really positive EBITDA and a good ROC. So those are decisions that we take depending upon the store location. But yeah, largely that's the number that we would project even this year. And we would also maybe close down still some more bunch of stores which are still low performing, or it will not be able to come back to the positive EBITDA numbers. Some of those actions, we have taken aggressive actions in the last year. We'll continue taking some more action in this year as well.
Lalit, just to sort of go back to margins, right? Now, you said that people are it's coming back. You're sounding cautiously optimistic. I think it's the right way to describe it, and you're watching and how things develop. Sure, but you also said that, even within your consumer cohort, people are choosing to consume lower price products, right? Slightly more expensive, and that's not really where the action is. Could you, Lalit, I'm just going to come back to you. I just want to make a quick mention. 2 listings are up on your screen. So one is, of course, TBO Tek. We'll have the management with us in just a bit. The other one is Aadhar Housing, and of course, subdued kind of listing for Aadhar Housing. I think it's a flattish. The pre-open was indicating a flattish rate. It's down about 1%, but look at that. TBO Tek is up 54% on some 4 million shares right out of the gates. 1,411 or so on TBO Tek. So one bumper and one a little softish is what you have to begin these new 2 sort of listings. More on that in a bit from now, but back to Lalit Agarwal of V-Mart. Lalit, I was saying that you, to take your point, that the consumption is happening on the lower end price products. What does it mean for margins? You did 7.6% in 24. What should we expect in 25?
I mean, definitely we should expect a little more positive margin because, see, that we had reduced our price points by almost 15%, 14% in the last year. And we would want to now keep it stable. We have reached a certain level. So from here, we want the consumption to come back, the volumetric consumption to come back. So we don't want to really push too hard on the margin piece. We want to definitely bring up the margin by increasing the volume. By the rupee gross margin should go up, the rupee margin should go up. So that's the approach that we have taken up now. And I think the margin should be northward and should become better, because last time we had 1% same-store sales growth. If we are able to clock 5 to 6% same-store sales growth in the coming year, we should have a healthy margin.
And close to double digits, Lalit? Possible? Everything else remaining same?
Let me not put numbers, don't put numbers in my mouth. Let's calculate that and let's hope for the best. And definitely that's what we should eye for, because all the huge losses that we have done in our online business also is something that we are tapering off. We are bringing down those losses. The quarter ended with a very low loss. So we are trying to create a roadmap where we see a little more break even in that online business as well, so that which can overall bring up the margin for the company.
But is the bulk of the cost sort of fixing costs be done, or there is a lot of room on that side?
So I think most of those are done, but still the business model of online is still not so profit making, and there are a lot of issues in terms of the whole logistic costs and the marketing costs and stuff. So we are trying to take more an omni approach, an omni-channel approach, where we are relying more on our V-Mart customers who are coming on the store, who can then latch onto the online piece or go on the store where they don't find sizes and they don't get those product lines in the store. So how they can get it at the home. So some of those pieces we are working on, so that we don't get into the trap of Meta and Google, so that we latch onto those social media marketing and performance marketing. So we are trying to go away with all of those pieces and trying to have a very, very balanced approach. So that's something which draws and sucks a lot of money.
Okay, thanks a lot for joining in. Appreciate your time here. Well, for the market, it's getting a bit volatile. So let's get Mitesh Thakkar on board. Mitesh, good morning. It's flat for the index, but the Bank Nifty has now moved into the red, and a little bit of pressure seen, on the Sensex as well, down about 40 odd points. Your thoughts for the rest of the day? What should the order look like, and what are the stocks to look at?
I think I'm still looking at the markets in the sense that in case we manage to stay above 2200, 190 zone, then I think towards the noon session or the closing session, I think we should recover. So this is a good level to take long position with a 40-point kind of a stop on the Nifty, and there's a good chance it might work out on the upside. On the stock side, I have a buy on Overall Reality with a stop at 1575. Look for targets of 1665, 1670 to begin with. Eventually, it can go higher as well. And on the other stock, I have a buy on REC with the stop at about 520 for targets of 550.
We got market absolutely flat, right? Now in the red, actually. The Nifty is also now in the red. So that's a sharp drop-off which we are seeing at this point in time. Look at that. If you can have the intraday up on your screen, and this has happened quite quickly. I mean, we were at the day's high at 9:56, not even about 8 minutes back. And look at the slide which has come through on the index. Mitesh, this is pretty sharp, right?
Yeah, Prashant, I think, the market has come off, but again, it's not a big decline. It's just about 70, 80 points kind of decline, which is less than 0.5%. This can happen. But as I said, I think watching 22, 190, 180 zone very closely. The support is at 22, 200, so you might see a 10, 15 point kind of violation. But if we start hitting below that, then I think, we'll exit our long exposure.
Just take a look at what is kind of causing the maximum pressure. I mean, there's nothing. HDFC Bank is adding about 12, 13 index points. I mean, I think what was up is essentially given up most of the gains, and that is where the problem really lies for the indices. I mean, Reliance is still pulling for the bulls. Tata Steel, NTPC, etc., still all in the green, but there's more down than up as far as the Nifty is concerned. But Sonia, I think we have the management of Mazagon Dock joining us now.
Yes, we do. In fact, recently Mazagon Dock completed 250 years in service. Defence Secretary Giridhar Aramane described Mazagon Dock as a precious jewel in the crown of India that has contributed immensely to building capacities for naval and commercial purposes. Now, the shipbuilders recently acquired land from the Mumbai Port Authority as well. So to discuss more on the way forward, what's the roadmap, we have Sanjeev Singhal, the Chairman and Managing Director of Mazagon Dock Shipbuilders, who's joining in. Sanjeev, thanks a lot for joining in. And I mean, the stock as well has been a huge performer in the last 1 year. It's given great returns to shareholders. So congratulations on several fronts on completing 250 years and, of course, adding a lot of value to shareholders as well. But I want to start by asking you, some questions on the earnings, right? Because you've had good growth over the last couple of quarters. I want to understand what is the roadmap from here? What are the growth drivers? Any change in either the vision of the company, the mission, and what kind of annual compounded growth can the company deliver over the next 3 to 5 years?
As far as the financial figures are concerned, I was told that I will not be speaking of financials because this happens to be the silent period up to the publication of the accounts and approval by the board. So broadly, I will be maintaining whatever has been there with respect to the past quarter. So without very much on the financial performance, what I can speak about the company is, yes, the points which you have touched upon, that there is a specific persistent thrust on indigenization and exports, and on these fronts, Mazagon Dock Shipbuilders is working very consistently. As you have informed that we have recently acquired additional 15 acres of land on long-term lease from Mumbai Port Authority, and this is the land which is at the existing boundary wall of Mazagon Dock Shipbuilders. So this facilitates in many respects that this would be a feeder facility. A lot of duplication of investments is saved, so we can create infrastructure, and we have plans to create infrastructure and certain balancing facilities which would be adding to the infrastructure and capabilities and capacities of the existing yard. In addition, we have also started developing the Nava yard, approximately 10 nautical miles from the existing yard, and we plan to construct vessels for which we have already received the orders, around 21 vessels from Coast Guard, which we received between October to January 23-24. So these vessels we plan to construct at the Nava yard with the floating dry dock, which we expect to be in place by October next year. So through roll-on, roll-off operations, the vessels will be launched. So these are some of the programs we have also initiated and found some success in the area of exports. So we have received certain orders, around 6 vessels we have received from a European client, and we expect these are certain steps which are in the right direction. And as rightly pointed out, that Mazagon Dock Shipbuilders continues to be a jewel in the defense industry, and particularly with respect to Navy. So we are also state that almost all the frontline weapon-intensive combat-worthy platforms. Practically all indigenous platforms have been supplied by Mazagon Dock shipbuilders to the Indian Navy. So this we continue to traverse the same journey.
So what according to you, sir, what according to you is the future of shipbuilding? What kind of investments do you see come into this space? What kind of opportunity do you see for your shipbuilders like yourselves? Of course, as we know, you are the biggest shipyard in the country, so you are contributing most to the assets of the Indian Navy. But just overall for the sector, what do you think the big growth triggers could be, and what is the future now?
Considering the geopolitical situation around, I believe that investments, as far as the defense is concerned, this cannot be pegged at any number. So whatever would be the requirements. And requirements, we see there are huge requirements with respect to submarines, for which we have already participated in the bid, P-75I, Air Independent Propulsion System, 6 numbers. For the additional Scorpion submarines, for which we have submitted the details to the Navy, 3 numbers. There are requirements for the additional destroyers. There are requirements for the additional frigates. So going ahead, we definitely see that the market is growing. In the commercial sector also, a lot of demand is there, and repair repeat segment also, which has not been tapped by us in a significant manner till now. But with the growth in the facilities and infrastructure, so this is also one segment which we would be so I see that there is a significant potential as far as the shipbuilding industry is concerned.
So hi, good morning, Prashant here.
Yeah.
I know you can't talk about because the silent period, but can you give us a broad sense? I mean, this is, I think, something we discussed earlier as well. What is the sort of order pipeline for which you have visibility looking like? What does that amount to right now?
I can speak about the published numbers. As far as the 6 number AIP fitted P-75I submarines are concerned, as per 2018 A1, it is approximately 43,000 crores. So maybe with the escalation for the past 6 years, this figure would have risen substantially. We have submitted our bid, so right now not in a position to comment with respect to what bid has been submitted. On similar lines, we have an order for 6 number of Scorpion submarines, of which we have already delivered 5. The last one we are targeting to deliver this year. In the same series, we are discussing additional 3 submarines. So this also, the details have been submitted to the Navy. Once the bids are accepted or opened and discussed, then only the numbers would be known. So this is with respect to the submarine area. And with respect to the destroyers, next generation destroyers, the ball has started rolling. We understand there is a requirement of 6 to 8 next generation destroyers. Similarly, with respect to Project 17 Alpha frigates, of which we are supplying 4 numbers and GRSC is supplying 3 numbers. So there again, the discussions are on with respect to a follow-on project of 17 Bravo. So again, frigates, which we expect to be 6 to 8 in numbers. So the finer details and contours and with respect to the pricing and the overall project size, this clarity would emerge with time. As of now, I can only say that 17 Alpha, as far as MDL portion is concerned, 4 frigates, it is approximately 27,000 crores. Which is being executed currently and which is an order of 2015. So there could be guesses with respect to what should be the pricing today. And with respect to destroyers also, which is 4 in numbers, 15 Bravo, which we have 3 we have delivered and last one we are targeting for delivery this year. So this was a 2011 order, approximately 34,000 crores for 4 numbers. So here again, the numbers can be guessed with respect to what likely number today for another 4 destroyers, or depending upon the number, whether it is 6 or 8, and how the Navy proceeds on it with the one single shipbuilder or 2 shipbuilders.
Got it. Got it. So just to, of course, I mean, the pipeline, as you said, a lot of this is discussion, right? And then orders are finalized and then the tender is placed out. But, and I will track that. For now, you're awaiting sort of the tenders to be opened for the P-75 order and 3 submarines, right? Immediately.
Yeah, I mean, additional submarines Scorpion and P-75I.
Yeah, okay,
6
got
numbers.
that. Okay, got that. So we'll leave it there. Thank you very much for your time. Great speaking with you. And I hope to speak once again to you once the numbers are released and you will be able to speak put out some numbers, specifically some numbers to what we discussed here today. We'll take a quick commercial break here. The market, of course, very, very volatile, completely off the highs. Manisha is here with the commodities on the other side. Stay tuned.
Welcome back. So let's do one thing. Let's get a quick handle on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, what's been buzzing over there?
A lot of things really, Sonia, but I'm looking at copper yet again because we've seen nearly 5% of gains in the overnight markets, and in the US, the crude price, rather the copper prices are now trading at an all-time highs. It's trading at a 2-year highs on LME, but on CME, on Shanghai, and in the Indian markets, it's an all-time high that you are seeing in case of copper prices here. Very strong gains is what we saw in the month of April, and May really seems to be building up on that. Well, if you look at the CME copper prices, we are at $300 in premium to the LME prices right now. So that tells you that the US demand clearly seems to be picking up on ground, and there is tightness in the immediate delivery in sense of copper, and that really seems to be supportive. In any case, the long term continues to be bullish. There are tight supplies. We have seen CME copper inventories decline by 30% since late March, and that has been supportive for the prices there. The Chinese economic data seems to be on the positive side, and the latest tranche from China in sense of 1 trillion yuan in bond issuance is something that really seems to be supportive. China, remember, consumes 50% of the global copper. So whatever happens in China does impact the copper prices there, and we have seen that impact working in as well. As I said, for the near term, the inventories seem fine, but it is the longer term, 2025-26, when the markets believe that this demand will be higher and supply will not be able to catch up. The Chinese copper smelting also has declined by 10% in 2024. So there are various factors in sense of supplies which seem to be supporting the markets right now. And the demand also seems to be coming in from the electricity and EVs, but also from weapons. There's a report that suggests that there's a lot of demand coming in from defense as a sector as well. And then you have green energy, data centers. So demand for copper going forward in the next 2 to 3 to 5 years does seem very, very strong. Now, this is a very interesting chart coming in from Bank of America, which does show you on what the global production and global consumption numbers look like. So I've taken the last year where you have the global production numbers at 25.9 and consumption slightly lower than that. This is also a year when you are working with a surplus. Now, this year, when you look at the markets, that surplus seems to have gone down. While the global production has gone up, so has the global consumption, and by leaps and bounds. Now, for next year, we are turning into a deep deficit here. So while the production does stand at at 27.6. The consumption is expected to grow many-fold, and that is what the markets are factoring in case of prices right now. Is the reason you have Goldman Sachs, Bank of America, Citi, everybody suggesting that $10,000 a ton is now done and $12,000 is what they're anticipating in the next 8 to 12 months.
Okay, thanks a lot for that. We'll take a quick break. We'll get chatting with Ankush Nijhawan and Gaurav Bhatnagar of TBO Tek on their stellar Dalal Street debut. Stay tuned. Well, the online B2B travel distribution platform TBO Tek made a stellar entry on the bourses, listed at 1426 rupees versus the issue price, which was 920 rupees. Now, TBO Tek's co-founder and joint managing director Ankush Nijhawan and Gaurav Bhatnagar are both with us. Gentlemen, morning, and thank you for taking the time out and speaking to CNBC-TV18. Congratulations on a good listing. Ankush, I want to start with you. You know, this, of course, the space that you're in is growing in a huge way, and the online B2B distribution platform, right, in travel, I want to understand what kind of growth rates are sustainable over the next couple of years, and what's the big trigger for you going ahead?
So first of all, thank you for inviting us this morning on a very, very happy day for all of us at TBO. I think for us, what we have done in the past, is what we will continue to build. And the growth, what we have demonstrated in the last 2-3 years. Our fundamentals are strong. We believe in building the business in the right way and ensuring that we deliver the right services both to our supply and our demand. On the other side, the tailwinds are definitely, in the favor of the tourism and hospitality industry. We all read this, there's no rooms available. People are traveling across the world. The airlines are adding more aircraft in India. Plus, the airport is putting a lot of money behind the infrastructure. So I think all these, the things which will definitely help us to grow, to the levels we expect, and keeping in mind the fundamentals, what we've been delivering for our partners and suppliers.
So can you help us with some numbers now that you're listed? What is the kind of growth rate that one can assume for the business, both on the top line as well as the expected margins in both FY25 and 26?
So our intention is to, maintain the same rates what we have done in the past. But now as we go forward, let's see, which way we go. But definitely, we are very positive on what we want to do and our growth rates as well.
Right. Gentlemen, morning. Ankush and Gaurav, and congratulations once again. Super listing. Prashant here. Ankush, so when you say expect to continue to grow, FI between 21 and 23, revenue CAGR was some 174%. Now, of course, that was also marked by COVID, so you're kind of coming off a low base, and so maybe not exactly comparable. Would you want to put some numbers to it, even in the ballpark? That'll be helpful.
So, Prashant, look here, you're right. Coming out of COVID, obviously it was a small base. If you were to compare our numbers with the last year pre-COVID FY20, you would see that roughly since FY20 revenue has a little more than doubled and EBITDA has grown faster because of operating leverage. Rather than putting some specific numbers on future forecasts, let me just tell you, the space that we operate in and what's the headroom for growth. TBO is a global platform. We operate in more than 100 countries. 70% of our revenue comes outside of India, and we operate in the global outbound travel space. Now, this space is $2 trillion, roughly $2 trillion in size, if you look at total travel spend only on outbound travel globally. We'll be somewhere between $3 and $4 billion out of that $2 trillion. So there is no dearth of headroom for growth in this business. So while, we would not be able to comment on specific growth rates, our belief is that given the tailwinds in the business, given the size of the industry that we operate in, given the fact that we operate in pretty much all the 5 continents, we would expect to see a bright future ahead.
No, I mean, FY23 numbers revenues were 1,065. You're already at 1,023 for the 9-month period. So, yeah, I mean, growth should be good. You're saying your total addressable market is $2 billion, Gaurav?
$2 trillion, Prashant, $2 trillion.
Sorry, that's the global, right? But you said outbound, global outbound from India.
Prashant, so no. Prashant, so our business, let me explain what the business is. So we aggregate travel agency demand globally. So whether it's a travel agent in India or a travel agent in the Middle East or a travel agent in Brazil or Indonesia, when a traveler comes to them and they want to book an outbound itinerary, so somebody traveling from Brazil to US or somebody traveling from India to Europe or somebody traveling from Dubai to Indonesia, our platform serves as a bridge between demand and supply, right? So that is the space that we operate in. Now, if you step back and look at how large that space is, 1.5 billion outbound trips happened in 2019, similar numbers this year. So look at that number, right? 1.5 billion people traveled globally.
Right.
And that number grows 6-7% every year. So 100 million more trips get added to this pie every year. So that is the space we operate in, Prashant. And then that's the reason we believe that, from where we are, our global market share is still very low and huge headroom for growth.
Right. That number, though, that trillion with a T, the number, Gaurav, that you put out, that is the value of all flights taken, right? I mean, total travel, right? The space that you operate in,
total travel spend.
Total travel spend. Correct. But the space that you operate in, could you kind of describe, which is kind of sort of connecting the buyer, the suppliers and the buyers on the on the other side? Could you give us a sense of how large that kind of market is? And just for our viewers, I mean, there is another company which is listed, which is RateGain. Broadly speaking, can I say you're in the same kind of space?
So, Prashant, I'll take the second question first. RateGain is part of the same supply chain, though they sit at a different part of the chain. We use a platform like RateGain to get access to travel supply from hotels, right? So while we negotiate with the hotels directly, but when we need access to rates and inventory, we connect to platforms like RateGain. So RateGain is very much a partner. On the size of the market, Prashant, sometimes it's surprising to see how large travel industry is, but just outbound travel spend is in the space of $2 trillion, right? If I were to double click on that, just the hotel spend, right? The global hotel GTV is a little short of $1 trillion, right? So that's the kind of space that we are operating in. And because we are operating in a global space, we are operating in across all the 5 continents. We do believe that when we look at addressable market, we do look at the global addressable market.
I just have one final question for Ankush before we let you go. Any other growth avenues or areas of growth apart from the hotels and the airline space that you're looking at in the near future?
So we will definitely, build on our ancillary products, which is primarily rail, sightseeing, zero rail, which I think car rental, for example, because we want to complete our offering to the travel buyers, which helps us to, further, get more stickiness from them. It also helps us to get more wallet share, on that transaction with us. So that's definitely a plan, apart from obviously deepening and building our hotel and air business as well, which is our prime focus.
Gaurav, would you want to give us a little bit of color on what margins? I mean, what's the headroom to? I mean, margins were at about 18% or so last year. What's the steady state we can expect from TBO?
So look, Prashant, our business has operating leverage in it, and if you see historically, last 3 years, our margin as a our EBITDA margins have been growing. The company's strategy is that from a take rate perspective, which is the commission that we keep for ourselves versus what we leave for travel agents on the table, we don't want to change that at all. Right? We want to make sure that the platform is not expensive for the buyers or the sellers to operate on. So we are banking on the fact that top line growth will translate into higher bottom line growth because of operating leverage over the next few years, and hence EBITDA margins should expand from where we are.
So essentially the number of what we should track, I mean the one metric that we should track is the number of bookings that you're handling. That's the number to track? I mean because
I think
pricing...
internally the North Star metric is how many travel agents are operating on the platform every day. The business is the platform business, so there are network effects. We know that historically the GTV grows faster than the number of active travel agents, right? So that's kind of like the number we like to track.
Okay, all right. We'll leave it there and we'll sort of have you back for a longer chat. Interesting space, and thank you very much for joining us with a lot of that.